Welcome back to Consider This. Melisa and Sharaad here with you today. Now, Malaysia's annual GDP growth moderated to 4.3% in 2019, which is the lowest level since the global financial crisis in 2009. Fourth quarter GDP slowed to 3.6%, which is the lowest in 41 quarters since the third quarter of 2009. Now, what does that mean for the Malaysian economy? Joining us on the line, we have Dr. Nur Ain Shahrier, Senior Lecturer at the Department of Economics and Finance at Sunway University Business School. Dr. Ain, thank you so much for joining us today. Now, could you help us put into context the GDP print? I mean, how do we make sense of the slowing pace of growth?
Okay, thank you very much for the questions. So if you can see the compositions of the growth for this fourth quarter 2019, the services sectors actually expanded it from the previous quarter of 5.9%. It increased to 6.1% in the fourth quarter of 2019. So our services sector is doing relatively very well. Manufacturing is moderating, and you can see the construction is also picking up from the third quarter 2019 at 1.5%, negative 1.5% to 1% in fourth quarter. However, the decline in our fourth quarter GDP 2019 is due to the mining and quarrying as well as the contraction in our agricultural sector. So in other words, the decline in the agricultural sector is from 3.7% in the third quarter of 2019 to negative 5.7% in the fourth quarter of 2019. This is due to the shortage of supply in the productions of our palm oil. And as a result of this shortage of the supply in the commodity productions of our palm oil, the net exports also contracted significantly. So if you can see our exports from negative 1.4%, it declined to negative 3.1% in the fourth quarter 2019. And this was, as a contraction largely in our agricultural sector due to the shortages of the supply in our palm oil productions.
So, Dr. Ain, I mean, if that's your assessment about the relative weight of different sectors and what they contributed to these numbers, then are you reasonably happy or sanguine about this overall picture? Or are there real concerns about, the situation moving forward?
Of course, if you see, if I may add one more point, the decline in our commodity supply, the productions in the palm oil is because of the weather as well as the fertilizers, and that is the domestic problem. It was not because of the external problem that affects the productions of our palm oil supply. It is largely due to the fertilizers. The planters use less of the fertilizers, and as a result, the yield of the palm oil is also less. So that is the domestic problem that worries us. So if you are asking now whether, this gloomy picture of the economy now is something as of the concern, I would say that it should be of a concern to everyone.
It seems that we may have lost Dr. Ain from the line. We're going to try and get her back. But I do want to point out something. So Dr. Ain made a really good point. So growth in the fourth quarter was particularly affected by the supply disruptions in the commodity sector, as you mentioned, especially in palm oil, which I guess would otherwise have registered quite a healthier figure on the back of strong private consumption. However, when we do get Dr. Ain back on the line, I'm curious to know, I mean, there are several trends that economists have been paying attention to about the Malaysian economy, things that we really need to pay attention to. For instance, private investment has been falling for several quarters now, and that's been concern. Private investment meaning that when companies don't feel confident in the economy, they hold back on spending, and that in turn damages the economy even more. So falling imports of capital goods and machinery could also signal a cautionary private investment outlook.
We have Dr. Ain back on the line. Yes, okay.
All right, wonderful. Thanks again for joining us again, Dr. Ain. I want to touch on something that you said a little bit earlier about the supply disruptions which had affected the fourth quarter numbers. However, if we look at the broader trends, the numbers reflect some weak conditions in the Malaysian economy, particularly the private investment, which has been low for several quarters now. Do you have any thoughts on the levels of private investment from the recent GDP print?
So the private investment in Malaysia, it is expanding at the 16.8%, and in the fourth quarter it registers 4.2%. It's actually like growing. So because in this fourth quarter GDP, the private consumption is also very strong. So when the consumption demand is very strong, the private investment is very strong as well. But the private investment in the gross capital formation is moderating, is slowing down. So that is something worrying, because we need the investment as the catalyst of our economic growth.
Right.
So something needs to be done to stimulate and revive back the investment in the economy.
Yeah, considering, the question now is, what can the government do to the extent they have some control of the situation? There's a promise of a stimulus package. What do you expect will happen? How do you think this government has learned lessons from over the last year to perhaps realign the economy so that it grows much better?
Okay, I would say that the most important thing is for the government to ensure the consumer confidence is in place. Due to the uncertainty, not only because of our domestic problems, some of the domestic problems, but more importantly is because what is happening around the world, the headwinds in the global economic situations. So there's a lot of fear and uncertainty there's a lot of fear and uncertainty to spend, to invest. So what is more important is, how do we want to ensure that the consumer confidence is there? How do we want to ensure that, moving forward, this is only a temporary slowdown in the economy, and eventually we will recover and bounce back? So the consumer confidence will affect the consumptions. And when it affects the consumptions, it will affect the investment domestically, as well as the foreign investments in the country. But as of now, I would say that our exposure to China, and given that China is the second world largest economy in the world in this year, 2020, and it is also Malaysia's largest trading partner, so we can't exclude ourselves from what is happening over there. So if trade war between China and the US, the coronavirus, so anything that happens in China is now beyond the control of the Malaysian government.
Yeah, on that question, Dr. Ain, we are moving into a presidential election in the US this year. Do you think that this will have any kind of effect, especially the potential for ramping up of tensions between the US and China, part of, the domestic political agenda in the US? Do you see that as a potential downside or a headwind for the Malaysian economy?
Of course, it's not only for the Malaysian economy, but also for other open economies around the world. Because we are, when there are something that happens with a major economy like the US, China, UK, European countries, so we are caught in between. And definitely investors will pull out their capital from countries like us, small open economy countries like us, to go back to the safe haven countries like the US, and other safe haven countries. So definitely what is happening globally will not exclude us from the impact. And we have the trade war between the US and China, and now we have the coronavirus in China. So there's a lot of headwinds in the global economy, and that is something that I would say that we should be worried about. But nevertheless, if we strengthen our domestic structure, these headwinds is going to be temporary.
Okay, all right. Thank you so much for sharing your insights with us this evening, Dr. Ain, for speaking with us on Consider This. We're going to take a quick break. We'll be right back with more, so stay tuned.